Imagine waking up one morning and realizing your money is gone, not stolen by hackers, not lost in a market crash. It still exists on a screen, but you are not allowed to touch it. You open your banking app, the balance is there, but withdrawals are blocked, transfers are disabled. Your card stops working. The system still exists, you just don't exist inside it anymore. This has happened before. It will happen again. When systems fail, most assets people believe they own vanish instantly, but some assets survive everything. Even governments struggle to control them. To understand why, you need to understand what ownership really means. Welcome to the Financial Detective, where legacy meets leverage, and the truth is always buried in the fine print. Most people believe ownership is physical. They think if something is written in their name, it belongs to them. But modern ownership is not physical. It is legal permission stored inside institutions. Your bank account is not money, it is a promise. Your stocks are not assets. They are claims recorded by custodians. Your property is not land, it is a title inside a government database. Ownership today exists only as long as systems allow it, and systems fail more often than people think. In 2001, Argentina froze bank accounts overnight. People stood in lines outside banks for days, trying to withdraw their savings. They were told no. In 2013, Cyprus seized money directly from bank deposits to save the banking system. People lost funds without warning. In Lebanon, capital controls trapped billions inside the banking system for years. People who were wealthy on paper could not access their own money. In Venezuela, hyperinflation turned salaries into worthless numbers. In Russia and China, capital controls limited how money could move. History shows a pattern. When a system is under stress, governments do not protect individual wealth. They protect the system itself. And if saving the system requires taking your assets, they will. Most people assume this cannot happen in developed countries, but every system collapses eventually. The only question is when. So what survives when systems break? The first asset governments struggle to touch is physical precious metals. Gold and silver have existed for thousands of years. They existed before modern states. They existed before banks. They existed before currencies. Gold does not require electricity. It does not require an internet connection. It does not require permission. It is value in physical form. When empires fall, gold remains. When currencies collapse, gold remains. When banks fail, gold remains. That is why central banks hold massive reserves of gold. They understand what most people don't. Gold is not an investment. Gold is not an... It is insurance against system failure. Silver plays a similar role, but on a smaller scale. It is easier to use for smaller transactions, and historically it functioned as everyday money when gold was too valuable. But physical metals have one limitation. They are difficult to move across borders. They are easy to confiscate if stored openly, which brings us to another asset class, land. Land has always been power. Every civilization, empire and state is built on land ownership, but land is only untouchable in the right jurisdictions. Land in a corrupt or unstable state is not safe. Governments can seize it, courts can rewrite ownership, titles can be erased, but land in stable, low corruption jurisdictions with strong property rights becomes extremely difficult to confiscate. That is why wealthy individuals buy farmland, real estate, and property in countries with strong legal systems. They are not buying houses, they are buying legal stability. Land is one of the oldest stores of value, but it is also one of the most political assets in existence. Another category that challenges government control is self-custodied digital assets. Cryptocurrencies stored on exchanges are not yours. Exchanges can freeze accounts, governments can regulate them, companies can collapse, but crypto stored with private keys outside centralized platforms becomes something different. It is information. And information can be moved across borders in seconds. A private key can be memorized. It can be stored in a brain. It can be written on paper and hidden. It can be encrypted and distributed. Governments can regulate exchanges. They can tax crypto. They can track transactions. But confiscating a private key that exists only in your memory is nearly impossible. This is why some people call Bitcoin and similar assets a sovereign money. Not because they are untraceable, but because they can exist outside traditional institutional custody. However, digital assets still depend on electricity, networks, and infrastructure. In total collapse scenarios, they are vulnerable, which leads to the most overlooked asset of all, Human capital, your skills, knowledge, and experience are assets governments cannot easily confiscate or. When systems collapse, people with useful skills become the foundation of rebuilding. Engineers restore infrastructure. Doctors restore healthcare. Technicians restore systems. Traders and merchants restore markets. Human capital is portable. It crosses borders with you. It cannot be frozen in a database. In every crisis, the people with skills adapt faster than those with money. Money is tied to systems. Skills are tied to individuals. Another asset that becomes powerful in collapse is social capital, trust, reputation, relationships. When systems break, formal institutions weaken. Informal networks rise. People trade favors. Communities rely on trusted individuals. Reputation becomes currency. A person trusted by their community can access resources, opportunities, and protection even when official systems fail. Social capital is invisible on balance sheets, but in crises it becomes one of the most valuable assets in existence. There is another category most people never consider: time. Time is the ultimate untouchable asset. No government can create more of it for you. No system collapse can restore lost years. People trade time for money, assuming money is permanent. History shows money is temporary, time is permanent. When systems fail, those who invested time in learning, building, and networking survive better than those who chased only financial returns. Modern society encourages people to maximize digital wealth, but digital wealth is the most system-dependent form of wealth in history. Your salary is a database entry. Your investments are ledger entries. Your pension is a legal promise. Everything depends on institutions functioning. The modern world has never been more centralized, and centralization increases efficiency, but it also increases fragility. One policy change can freeze millions of accounts. One cyber attack can disrupt entire financial systems. One geopolitical conflict can isolate entire economies. Most people assume the system will always work, but systems are built by humans, and humans make mistakes. The uncomfortable truth is this: you don't own most of what you think you own. You are allowed to use it until you are not. When systems fail, ownership becomes power, and power belongs to those who prepared for failure. The idea that governments cannot touch certain assets sounds comforting, but reality is more complex. Governments are powerful because they control legal systems, militaries, and financial infrastructure. They can tax, regulate, restrict, and confiscate, but their power is strongest inside their own systems. The moment value exists outside formal systems, control becomes harder. This is why every major government in history tried to control gold, land, and trade routes. It is also why modern governments regulate banking, crypto, property, and data. They understand something most citizens do not. Power follows assets, and assets shape power. In the 20th century, governments nationalized industries, seized land, froze accounts, and controlled currencies. In wartime, private property becomes optional. In crisis, individual rights become negotiable. Ownership is stable only during stability. This is why diversification across system-dependent and system-independent assets matters. Physical precious metals exist outside banking systems. They are vulnerable to physical seizure. Land exists inside legal systems, but strong systems protect owners. Digital assets exist outside traditional finance, but depend on infrastructure. Human capital and social capital exist entirely within individuals and communities, say. Each category has strengths and weaknesses. The goal is not perfect safety. The goal is resilience. Resilience means surviving multiple failure scenarios. If banks fail, physical assets matter. If borders close, skills matter. If currencies collapse, commodities matter. Social systems break, trust matters. The modern financial system encourages concentration. One currency, one banking system, one legal jurisdiction, one digital identity. This creates efficiency but increases single-point failure risk. History is full of single-point failures. The Roman Empire collapsed due to political fragmentation and economic mismanagement. The Soviet Union collapsed under structural inefficiency and political pressure. Weimar Germany collapsed under hyperinflation. Argentina collapsed repeatedly due to fiscal mismanagement. In each case, paper assets disappeared, but physical assets and human capital remained. People often ask whether collapse will happen again. The answer is not whether. The answer is when, where, and how severe. Every system collapses eventually. The only uncertainty is timing. Modern systems are more complex than any in history. Complex systems are powerful, but they fail in unpredictable ways. A small shock can cascade into systemic failure. A banking crisis can become a political crisis. A political crisis can become a currency crisis. A currency crisis can become a social crisis. Most individuals are positioned entirely inside these systems. Their savings, income, identity, and legal rights all exist inside centralized frameworks. This makes modern individuals more productive. It also makes them more fragile. The assets that survive collapse are those that reduce dependence on centralized systems. This is why wealthy individuals diversify across countries. Multiple passports, multiple bank accounts, multiple properties, multiple business structures. They are not paranoid. They are historically informed. They understand that no system is permanent, but diversification is not only for billionaires. Individuals can diversify in smaller ways, holding some physical assets outside banks, learning valuable skills, building strong relationships, maintaining mobility, understanding legal frameworks, heading legal framework. These actions do not prevent collapse. They reduce vulnerability. There is also an emerging asset class government struggle to control information, data. Encryption and decentralized networks challenge traditional power structures. A single encrypted message can transfer millions in value. A decentralized network can operate without centralized authority. Governments respond with regulation, surveillance, and legal frameworks, but technology moves faster than law. Information is becoming a form of power independent of geography. This creates a new category of untouchable assets, cognitive and digital sovereignty. A person who controls their data, knowledge, and digital identity holds power beyond traditional systems. However, information is intangible and fragile. It depends on hardware, electricity, and networks. In a total collapse scenario, physical and human assets become dominant again. Collapse is rarely total. Most collapses are partial, regional, or sector-specific. During partial collapse, hybrid assets matter most. For example, during currency collapse, commodities and foreign currencies matter. During banking collapse, cash and precious metals matter. During political collapse, land and social networks matter. During technological collapse, skills and physical tools matter. The key is understanding failure modes. Most people prepare for the wrong scenario. They prepare for market crashes, not system crashes. They prepare for inflation, not confiscation. Not confiscation. They prepare for unemployment, not capital controls. System failure is different from market volatility. Markets fluctuate within systems. Systems define whether markets exist. Another overlooked asset is legal structure. Corporations, trusts, and international structures can protect assets from direct seizure. Legal engineering is a form of asset protection. This is why wealthy individuals hire lawyers, not just financial advisors. Legal structure is power, but legal structures still depend on jurisdictions. If a jurisdiction collapses, legal structures collapse with it. True untouchable assets are those that transcend jurisdictions. Skills, knowledge, relationships, reputation, and physical portable assets fit this category. A surgeon can move to another country and rebuild income. An engineer can rebuild infrastructure anywhere. A trader can rebuild capital in new markets. A respected individual can rebuild trust in new communities. Human capital migrates. Physical assets can be carried, digital assets can be transmitted, real estate cannot move, local currency cannot escape, domestic pensions cannot migrate. Mobility is a hidden dimension of asset safety. Assets that move with you are harder to confiscate. This is why refugees throughout history carried gold, jewelry, and skills. They did not carry land deeds. They did not carry bank balances. They carried what survived: displacement. Collapse is displacement at scale. Another factor is psychological resilience. Mental strength is an asset. In crises, panic destroys wealth faster than governments. Those who remain calm make rational decisions. Those who panic sell, abandon, or freeze. Psychological capital is not measurable, but it determines survival outcomes. Financial literacy is another intangible asset. Understanding how systems work allows adaptation. Ignorance creates dependency. Most people outsource understanding to institutions. Institutions fail. Understanding is a form of sovereignty. The concept of untouchable assets is not about escaping governments. It is about reducing dependency. Governments are necessary for large-scale civilization, but dependence creates vulnerability. Balanced systems include both institutional and personal assets. The future will likely include more digital control, not less. Central bank digital currencies, digital ID, and automated taxation increase efficiency and oversight. This increases convenience. It also increases systemic risk. A single digital infrastructure failure can affect millions instantly. Physical redundancy becomes valuable. Paper, metal, skills, and community act as redundancy layers. The trend of centralization is not evil. It is powerful and fragile. Those who understand fragility prepare. Those who ignore fragility assume stability is permanent. History punishes that assumption. The idea of untouchable assets is not about escaping reality. It is about understanding the nature of power. Power is not just political. Power is economic. Power is social. Power is informational. When systems function, power is distributed through institutions. When systems fail, power returns to fundamentals: food, land, energy, skills, trust, mobility. These are the primitives of civilization. Modern finance abstracts these primitives into symbols on screens. Stocks represent ownership, bonds represent promises, currencies represent trust, digital assets represent consensus. But abstractions depend on systems, and systems depend on stability. When stability disappears, abstractions collapse back into primitives. This is why every collapse looks similar at the core. People seek food, people seek shelter, people seek security, people seek community. Money becomes secondary, institutions become secondary, primitives become primary. The most untouchable asset is adaptability. Adaptability means the ability to change environments, professions, networks, and strategies. Rigid individuals collapse with rigid systems. Flexible individuals migrate across systems. Adaptability is a meta-asset. It enhances every other asset. A person with gold but no adaptability can lose everything. A person with adaptability but no gold can rebuild everything. The modern education system rarely teaches adaptability. It teaches specialization within systems. Specialization is powerful in stable systems. Generalization is powerful in unstable systems. Hybrid individuals thrive in both. Another overlooked asset is optionality. Optionality means having multiple paths, multiple income streams, multiple locations, multiple skills, multiple identities. Optionality is expensive in stable times. It is priceless in unstable times. Most people optimize for efficiency. Efficiency reduces optionality. Redundancy reduces efficiency but increases survival. Nature favors redundancy. Biological systems include backup systems. Civilizations that survive include redundancy. Financial systems rarely do. Another untouchable asset is narrative control. Those who control narratives influence behavior. Behavior influences markets. Markets influence power. Media, culture, and perception shape economic outcomes. An individual who understands narrative manipulation can avoid being manipulated. They can also influence outcomes. Narrative literacy is power. Another primitive is mobility. Mobility is physical and digital. The ability to move capital, self, and identity across borders and systems. Mobility reduces dependency on any single jurisdiction. Throughout history, mobile groups survived collapses better than sedentary ones. Merchants, nomads, traders, diasporas. Mobility is not just travel, it is legal mobility, digital mobility, social mobility. Another asset is decentralization of life. Living entirely inside one city, one bank, one job, one currency is efficient. It is also fragile. Distributed living increases complexity but reduces catastrophic risk. The modern trend is hypercentralization, cloud systems, global banking, digital identities, platform economies. This increases productivity. It also creates systemic single points of failure. Individuals who decentralize parts of their lives reduce risk. Another category of untouchable asset is cultural capital. Understanding norms, languages, and cultures allows integration into new systems. Cultural adaptability accelerates recovery after collapse. People who understand multiple cultures can migrate and rebuild faster. Culture is a hidden survival technology. Another fundamental asset is health. Physical health determines survival, mobility, and productivity. In collapse, healthcare systems fail. Personal health becomes personal responsibility. Health is capital. It is biological capital. Another asset is community. Individuals survive collapses. Communities survive collapses better. Networks provide food, security, information, and support. Isolation is a vulnerability. Community is a decentralized institution. Another overlooked asset is tools, physical tools, machines, equipment. In collapse, production capabilities matter. Those who can produce energy, food, and goods hold power. Tools are stored labor. Another intangible asset is ethics. Ethics shape trust. Trust shapes networks. Networks shape survival. Reputation is slow to build and fast to destroy. In collapse, reputation can mean survival. Another asset is foresight. Understanding historical patterns allows preparation. Most collapses are predictable in hindsight. Debt accumulation, political polarization, currency debasement, technological disruption. Foresight allows early adaptation. The concept of untouchable assets is not a checklist. It is a mindset. It is understanding that systems are tools, not guarantees. It is understanding that institutions are powerful but fragile. It is understanding that personal sovereignty matters. Sovereignty does not mean isolation, but it means agency. Agency is the ability to act independently. Assets that increase agency are untouchable in the deepest sense. Skills increase agency. Knowledge increases agency. Networks increase agency. Health increases agency. Mobility increases agency. Capital increases agency. Agency is the ultimate asset. The modern world is moving toward more centralized control and automation. This increases efficiency. It reduces individual agency. Automation reduces skill necessity. Centralization reduces autonomy. Digitalization reduces privacy. These trends are not evil, they are structural. Those who want agency must intentionally cultivate it. The future may include corporate governance, algorithmic decision-making, and digital currencies. In such a world, personal agency becomes more valuable, not less. Untouchable assets are those that persist across governance structures, technologies, and political regimes. Gold existed under kings, dictators, democracies, and corporations. Land existed under empires and nation-states. Skills existed across civilizations. Trust existed before states and after states. These are civilizational constants. Most modern assets are civilizational derivatives, stocks, bonds, pensions, digital credits. They exist because systems exist. Constants survive derivatives. The safest strategy is not abandoning systems. It is hedging against system failure. Use systems, benefit from systems, but do not fully depend on systems. The modern individual must think like a decentralized institution. Distributed assets, distributed skills, distributed networks, distributed locations. This is not paranoia. It is resilience engineering. The ultimate untouchable asset is consciousness, your perception, decision-making, and identity. Systems can influence behavior. They can restrict movement. They can control resources. But consciousness remains the core of agency. Throughout history, individuals survived prison, exile, poverty, and collapse because their minds remain sovereign. Mindset determines outcomes. When systems fail, panic destroys value. When systems fail, clarity creates value. Those who understand the nature of systems are less surprised when systems fail. The narrative of untouchable assets is not about hoarding gold or escaping society. It is about understanding layers of dependency. Dependency creates vulnerability. Independence creates resilience. Balance creates sustainability. A life fully independent of systems is impossible. A life fully dependent on systems is fragile. The optimal state is strategic interdependence. Use systems when they work. Maintain personal primitives when they don't. History does not end. Systems rise and fall. Empires expand and contract. Technologies disrupt and obsolete. But human primitives remain: food, land, energy, skills, trust, mobility, time. These are the assets governments cannot fully touch because they exist beyond legal registries and financial ledgers. They exist in physics, biology, and human relationships. When systems fail, these primitives define survival. When systems succeed, these primitives define power. The lesson is not fear. The lesson is awareness. Most people prepare for market volatility. Few prepare for system volatility. Wings. The greatest risks are rarely discussed. Because discussing them undermines confidence, and confidence is the foundation of modern systems. But individuals who understand risk are not pessimists. They are realists. Realism is not collapse obsession, it is contingency planning. The future will likely be neither utopia nor apocalypse. It will be uneven, fragmented, and complex. Some systems will fail, others will thrive, some regions will collapse, others will prosper. Untouchable assets are those that allow navigation through complexity. They are not immune to loss. But they are resistant to systemic erasure. In the end, governments can tax, regulate, and confiscate within their domains, but they cannot fully control skills, knowledge, trust, time, and adaptability. They cannot fully control consciousness. These are the assets that persist across every regime. When systems fail, individuals survive systems. And the individuals who prepared are not the wealthiest. They are the most resilient.